Bitcoin is the only thing that you can sell. You can sell it short with 50x leverage on Saturday morning. It's the only thing that you can short 50x on Saturday morning. So when people panic on a weekend or an evening, it's going to be volatile. And if someone wants to sell some financial asset because of some gloom and doom thing that's happened, they're going to go to Bitcoin first because it's the only thing they can trade. And not just trade in the US, trade globally, worldwide. And so it is volatile because it is useful, and it will be in times of panic and contraction. It will correlate for a short moment with other assets, but then it will bounce back and it will break. It'll break that correlation, decouple, and it'll rally higher. And that has happened, consistently for the past 15 years.
Michael Saylor's message that Bitcoin is the future is more relevant than ever in a world where financial systems are becoming more and more unstable. Trust in traditional financial institutions is fast declining as a result of governments continuing to generate money, rising inflation, and expanding geopolitical conflicts. According to Saylor, Bitcoin is the best hedge. He believes that a single Bitcoin might reach an incredible $13 million in value. Although that may seem unrealistic, Saylor's confidence stems from a thorough comprehension of the underlying economic dynamics. Scarcity emerges as the most valuable asset when monetary policies get more aggressive and the value of fiat currency keeps declining. Bitcoin is the ideal solution to a global system in disarray because of its fixed supply and decentralized structure. More people and organizations are realizing that Bitcoin is a long-term store of value as well as a speculative asset. Watch this video through to the finish as Michael Saylor discusses why the world's ongoing collapse could cause Bitcoin's price to soar to $13 million. Please remember to like this video, subscribe to the channel, and enable post notifications before we delve further. Thank you and enjoy the video.
And I started buying it in the 9,000s or the 10,000s. And I remember when Bitcoin was 10,000 and the NASDAQ was like 12,000. And, then Bitcoin would rally up and rage, and then there would be a crypto crash and it came down. And on the other hand, here we are today, Bitcoin's like 96 or 97,000, the NASDAQ 17,000. And now we're in a big tariff crisis. And the near-term reaction is always the market cramps and everybody sells everything. But the long-term reaction is, if I had all my money invested in Bitcoin instead of invested in that company, I wouldn't have been affected by tariffs. And so what you have is a reallocation of portfolios to being more Bitcoin, less the other thing. People are thinking now, if I had more Bitcoin, less gold, I would have made a lot more money in the last 4 years. If I had more Bitcoin, less big tech, I would have made a lot more money. If I had more Bitcoin and less that bond instrument, I would have done better. So these are teaching moments, right? And in any macro panic, the most liquid, leverageable asset is Bitcoin. Bitcoin is the only thing that you can sell. You can sell it short with 50x leverage on Saturday morning. It's the only thing that you can short 50x on Saturday morning. So when people panic on a weekend or an evening, it's going to be volatile. And if someone wants to sell some financial asset because of some gloom and doom thing that's happened, they're going to go to Bitcoin first because it's the only thing they can trade. And not just trade in the US, trade globally, worldwide. And so it is volatile because it is useful, and it will be in times of panic and contraction. It will correlate for a short moment with other assets, but then it will bounce back and it will break. It'll break that correlation, decouple, and it'll rally higher. And that has happened consistently for the past 15 years. And it's happening right now as we watch it. So I'm calm in these times because I think we're going to win over a new set of Bitcoin believers, and a new set of people that thought they had the perfect business are going to realize that no investment in real estate and private equity and public equity or in a currency derivative is a risk-free investment. And when we say, look, Bitcoin is not a currency derivative, it is not a company, it is not real estate, it doesn't have a supply chain, it has no employees, it has no nexus, it is not, subject to that counterparty risk. Now there'll be a new class of investors that will understand what it means to be exposed to those risks, and they'll be like, oh, you mean like no tariffs on Bitcoin? Yeah, no tariffs on Bitcoin. And so there's a world of opportunity in the financial marketplaces if you incorporate the appropriate dose of Bitcoin volatility and Bitcoin performance into whatever instrument you're trying to create.
Are you surprised the US hasn't yet bought Bitcoin?
I'm not surprised. I think I was surprised that the U.S. has embraced Bitcoin as radically as it has over the last 6 months. I think I didn't expect nearly all the cabinet members to be so enthusiastic, or the Secretary of the Treasury. I didn't expect the Strategic Bitcoin Reserve, to be put in place so quickly. I didn't expect the crypto czar to declare that Bitcoin is, the one, global digital commodity in the world and is digital gold. I didn't expect the President of the United States to say never sell your Bitcoin. So those I didn't expect. I generally expect that large governments will move in a plodding, somewhat methodic, not always rational fashion, because there are just so many interests involved. And so my expectations are moderated in that regard. I think most of the aggressive action will come from small, mid-sized businesses, because they have the most to gain, the least to lose, and they can move the quickest.
When the market crashed in 2020, Bitcoin temporarily dropped below $5,000 before swiftly rising back to between $9,000 and $10,000. As Bitcoin kept growing, a lot of other assets had trouble. The same pattern is showing up now, with Bitcoin trading at about $104,000 and global markets strained by uncertainty and tariffs. Bitcoin has demonstrated an excellent capacity to bounce back fast from market turbulence over the last 15 years, frequently emerging stronger than before. The distinctive structure of Bitcoin contributes to its resiliency. It is not a business, it is not dependent on supply chains, and it is not impacted by counterparty risk or tariffs. Since Bitcoin is the most liquid asset, it frequently sells off during panics, but it also recovers more quickly than most other assets. Bitcoin trades all around the world, around the clock. Don't forget to subscribe and hit the bell icon to stay updated on our latest videos. We'd love to hear your thoughts in the comments. Now let's dive back into the interview.
What do you think is the best way to 100x your money? Can you still do it with Bitcoin, and what types of strategies can be deployed?
I think the best way to get superior returns, 100x type returns, if you're an individual, would be you keep your day job, and so you maximize the cash flow you generate via whatever your profession is. You're responsible on your expenditures. You have to think, in the year 2045, I think a Bitcoin's worth $13 million. So every Bitcoin that you don't buy is a $13 million cost. That Ferrari that you're going to buy is going to cost you like 6 Bitcoin. And so it's going to be a $100 million Ferrari, right? If you look out 20 years. So you have to keep your job, unless you're insanely rich, don't splurge on the Ferrari. Buy the 6 Bitcoin instead. And with regard to leverage, the intelligent leverage for the individual is generally long-dated, mid-dated mortgage debt. So if I have any kind of property, if I have a house, I would put a long mortgage on it, a 10-year mortgage, a 15 to 20-year mortgage on it, especially a conforming loan, and then I would roll it into Bitcoin. Because mortgage debt is not mark to market. It's against an asset which is fairly stable. Normally the interest rates are somewhat subsidized by a Fannie Mae or a Freddie Mac program or a government program. So it's the cheapest form of permanent capital that someone can get. So I give you what you shouldn't do. You shouldn't quit your job. You shouldn't splurge on sports cars you can't afford. Don't buy a yacht because it's obscenely expensive. And don't pay off your mortgages. Don't get debt free. Any capital you have that's not marked to market capital would be better invested in an asset that's going up 30% a year for the next 20 years.
Michael Saylor considers the unexpected advancements in the U.S. government's adoption of Bitcoin, particularly in the last few months. He was surprised by how enthusiastic important government officials, including those from the Treasury Department and Cabinet, were. The creation of the Strategic Bitcoin Reserve and the public acknowledgement by significant cryptocurrency organizations of Bitcoin as the global digital commodity and digital gold also caught him by guard. In public, even the U.S. president has advised people to never sell your Bitcoin. These surprising actions demonstrate how quickly the highest governmental authorities are beginning to understand Bitcoin. Saylor isn't too shocked, though, that Bitcoin hasn't been designated as a national reserve asset by the U.S. yet. He claims that governments often act methodically, perhaps irrationally, and cautiously. He thinks that smaller to mid-sized firms will probably adopt Bitcoin at the fastest rate, compared to bigger, more bureaucratic organizations. These companies are quick to respond and stand to gain the most by adopting Bitcoin. Saylor also talks about how ownership of Bitcoin has changed recently. The market ultimately started to rise, and a large portion of the Bitcoin that had previously been owned by governments, attorneys, or bankruptcy trustees, such as those involved in the FTX bankruptcy, was sold off. These groups used the market rally to sell off their assets since they had no long-term outlook on Bitcoin. This trend is currently being replaced by a new generation of investors that are more dedicated to long-term Bitcoin holdings, especially through Bitcoin ETFs and Bitcoin treasury firms. Don't forget to like, subscribe, and enable notifications for more valuable content, and as always, happy investing.